Hello everyone and welcome to Macro Cafe episode 2. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. Alright, is it Saturday morning here in Chicago? We have quite a few charts to go over, and I guess the questions in everybody's mind is, have we found a low in these markets? And I have a few charts to go over and put some arguments forward in kind of where we are and how we see the markets kind of moving forward. We're going to jump to that in a second. Go ahead and follow me up here on Twitter. This is my account. And at Elliott Cafe, you might find a few interesting things. And if you want to engage into some discussions or you have charts you want to share or questions, this is the easiest way to follow me. I'm also up on Telegram. That's where I have a private channel. The link for that is right here. You can go ahead and give that a try if you want. But yeah, let's jump over to the charts. And I'm going to start, with a quick look at the overall markets here. We're going to take a look at the SPY. Then go and, you can see you have the Dow Jones, you have the Nasdaq Composite, and then you have the Russell. So all these markets, have some interesting developments in here. And like I said, the question is, do we already have a low in these markets and are we ready to move back into the bullish phase, or there is still a lot more downside to come? So for that, I wanted to go back and just kind of analyze these kind of all at the same time, and I'm looking, where is the low in all these markets, and they differ quite a bit. So for example, if you look at the SPYs, the low in the S&P 500 was in October 13th, which you can see it's right here. These are the daily time frames on a closing basis. But if you look at the Dow Jones, that actually bottomed, about, maybe a couple of weeks earlier on September 20th, and it started to create that divergence where you see up here in the red line, and it's been climbing ever since. So the first market that actually bottomed in here between the SPY and the Dow Jones is actually the Dow Jones. But if you look at the Russell, this one actually bottomed on June 16th, or at least those bottoms haven't been challenged since on a closing basis. The low that was made up here at the end of September was quite several points higher than the low that was made on June 16th. So the official low for this market in the Russell is basically right down there. Now, if you look at the Nasdaq Composite and Nasdaq for that matter, the Nasdaq 100, that actually bottomed, and the closing low for this markets was up here on December 28. You might have thought that October 13 was the low, because that's when it kind of felt the worst, and that's when you've had the larger drops here in the S&P 500. But there was a new closing low that happened on December 28. So officially, this is the low of the market in the Nasdaq. So you can see these lows are pretty much all over the place, right? Starting with the Dow Jones, that it's September 30th. This one is in June 16. Then you have the S&P 500 and you have the Nasdaq Composite. And usually this is not what happens when you have the end of the bear market. It's something like this happens over at the tops because as stocks starts to fall out of favor, if you look up here how the tops got formed, they also had different dates when this kind of happened. So it's this type of a pattern with multiple lows in different dates actually happens. It does not happen at the end of the bear market. And if you look back in 2008, 2009 low, when we've had the major capitulations in here, those lows happened in March 6th. Some people would argue that it was March 9th, but I think it was March 6th when everything kind of bottomed. So quite a big difference between what's happening right now in here and kind of what's happened when we've had a major bear market low. Now, either this is not, it was just a simple correction and we're moving higher with, things here not matching, or there is still a major capitulation that comes into the stock. So I just want to kind of draw this to your attention to kind of see where we are, and then also take a look at where we are in relationship with the 200-day moving average. The S&P 500 is breaking up here and closing above it at about 398.50 on the SPYs. Dow Jones have passed this quite a while back. So back in November, and these markets were not able to get back below it, although it's kind of flat, which is suggestive for now of more of a sideways market. Nasdaq Composite and Nasdaq 100 are way below the 200-day moving averages still, and then IWM here just kind of pushed back above it in a more serious manner. It tried a couple of times and failed, and this rise here seems to be a little bit more powerful. All right, so let's jump over to the counts and see what the markets are saying in here. So for that, I'm going to take a look at my macro weekly list. You can see it in here. This is what we're going to go over, basically S&P 500, Nasdaq, and all the rest, and see what the markets are telling us. So basically, S&P 500, since about 4 weeks ago, it stopped going down, and on the weekly time frames in here, it seems to be picking up a little bit of a momentum. So the question is, if this was the low and you had just a simple ABC in here, is this a wave 1 and a wave 2, and you're beginning the larger sequence upward? So let's take a look at the counts. My preferred interpretation and my number, my number one count, I should say, right? The primary count that I have continues to point lower in here towards, either a second wave or the beginning of a larger bear market. But, right now we're getting a little bit squeezed out of this interpretation because this wave 2 is getting a little bit too large. So it's pushing, even above 61.8 retracement of this wave 1 decline. So that's kind of what we're watching. It could still, even if you're going to take this B wave, it's still possible that this, it's still an impulse here in a wave 1, and you're doing a very simple A, B, and then up in C here, and then you drop again. So, truthfully, before, until this kind of X wave gets taken out, you still have a lot of arguments towards the bearish side. But we're watching this second wave pullback and see if there's going to be a response coming into the next week, because if it is, if it is a second wave, then we have to start reacting from here without pushing much higher here. Otherwise, we have to move to the other alternate, that this is an A, B, and then up in C. So this is kind of what I'm watching there. And then on, up on the bullish side, I think I've got it here, is that this was an ABC. That's a wave 1 and a wave 2, and then this should move higher. So if you're starting to get back above this 4,300 into the S&P, then I think rest assured, you're probably going to be looking at the market that's probably going to make new highs in here. So these are the primary interpretations that I have. I just kind of want to walk you through it. So once again, I'm looking at this as a second wave. I'm discussing this with the members every single day into the morning updates and through the daily videos, and see how we're kind of following this, this through, and if it still has solid grounds to stand on. Even if this is a wave 1, from the bullish perspective, right, you're still, this still seems kind of fairly short to be just a simple ABC, because if you're looking at it, it's a pretty impulsive move. So this would be wave A, then you will look at the B and another C, and then you push to the upside. Otherwise, you would have to count this in some kind of an ABC flat, because this was a pretty sharp impulse. It's hard to kind of count this as the entirety of a second wave. So that's where we are in the S&P 500. All right, let's jump over to the next chart, and this is the Nasdaq Composite. It's a similar story. I'm looking at the weeklies. You've had, a couple of dojis in here, right? We call this dragonfly dojis when they go low and then they close near the highs, and they kind of happen after a little bit of a bearish move. Now, it wasn't such an aggressive sell-off in here, so I don't know how much importance you can put to these, but definitely they showed indecision, and they showed that the bears, that the bulls are starting to come back here. So, this kind of last week, we've gone, pretty bullish in here, and we're still, again, below the 200-day moving average, which roughly sits at about 12,000 right now in the Nasdaq 100. Up on the counts in here, if I go back and take a look at this, at the Nasdaq, we're still, it's one of the weakest markets still, and we're looking from this as an A, B, and then as a wave 1, as an ABC up here in a wave 2. As long as we remain the 78.6 retracement of this B wave, then we can look at this as a second wave pullback and look for the next move to the downside. Now wave B, if we're starting to climb back above this high, it could still work as an A, B, and then up in C in some kind of a zigzag until actually wave X gets taken out at about 13,720. So you can see, I mean, this has been a big bear market since November 2021, and it's been it's been continuing here, and you're still in a large series of lower highs and lower lows, so we got to respect that. Now the fact that we haven't made a new low in here, it's pretty powerful for the bullish argument, but we need, even this move in here, it doesn't look like it's that convincingly on the bullish side, but I have a lot of other indicators that I'm watching in terms of breadth and volume and kind of risk parameters up there. We're looking at credit spreads, and we're looking at yields, and there's a lot of other information that can help us kind of gauge where we're finishing off this bearish market. So for right now, I'm still gonna stay with the bearish outlook, but the more the data starts to become convincing, then combining that with the counts, we're going to have to probably flip bullish. So that's on the Nasdaq in here. Let's take a look at the Nasdaq Composite, which is very, very similar to the Dow, to the Nasdaq 100 in here. Again, just a couple of weeks on the weakness, and then a pretty bullish candle in here. If we can establish ourselves above some of these key moving averages, I think the bulls will have a lot more to say. Take a look at the Dow Jones, which has been, again, a pretty strong market that bottomed, right here, and then, it's been pushing high. Now I'm counting this, still as an ABC, kind of a flat formation, but I'm starting to kind of get squeezed out of that as well. So if I go here and I show you the DJI, this is the count that we're watching, an A wave decline in here, followed by an ABC, a very large flat formation in this B wave. And then we were pretty accurate here in this drop. We were watching this with the members, so it came down, it sold off in this wave 1, and now we're doing a squeeze up higher in a wave 2 or a wave B. So under the bullish alternate, which I might have here, right, this is an ABC, followed by a wave 1, and then a wave 2 in here. Don't you think? I think it seems too short. It would be maybe this is more appropriate, where this is an A, then up in B, and then another C down to pick up for the second wave in here, and only then you can push to the upside. So shorter term, I would definitely be cautious with the Dow Jones and the rest of the markets, because I think there's probably going to be some pullbacks coming. But anyway, that's kind of what we're watching under the bearish scenario. If this is a B wave, that would be a much larger decline, beginning next in these markets. It's kind of hard to believe that this could be the case, by the way kind of the markets are acting here lately, and some of these kind of latest excitements, even on the meme stocks, and you see Bitcoin pushing higher, and it kind of challenges all the bearish arguments up in there, right? But this is how it usually feels when you get a sharp rally, a counter trend in a bear market. So let's see how that's going to go. Again, I'm not fully convinced yet, but it's probably not going to take long for me to get to the bullish side if this markets continue to push. All right, so let's go back and take a look now at the Russell. Again, this one bottomed back here, right? So back in June, we did not make a new closing low. And, these kind of smaller caps, because were the ones that were hit the hardest when this kind of bear market started, it's starting to push higher in here as well. So, what is this? Is this a wave 1 and a wave 2? Was this whole thing an ABC? It seems rather short in my view, but this, could still stay in the bearish narrative by looking at it as a wave 1 decline, and then you have an A, B, and then up in C, and then you crash to the downside. So these levels in here are probably going to be, very important still, you know, if we kind of get back above them, and especially this line, I mean, this is a massive resistance right there. You know, if markets are managing to get back above those, I think it's going to be very hard to remain bearish on this market. And then taking a look at the counts, sorry, that's Bitcoin. Let me come back here. And what is my Russell? You know, so just a WXY, X, and then another A, B, and then a wave 1 with a deep wave 2, 3, 4, and 5 to complete this decline. And just like I showed before, if this, you know, this could be a wave A, and then that's an A, B, and then up in C, and then you go back lower, right? But once you start to climb back above this X wave, then you're starting to look more at this as a double bottom, you know, right there. And then the likelihood that this will continue then increases significantly for getting back above those levels. So those are going to be some of my cutoff lines to switch back to the bullish side. Until then, you know, I still think we need to be cautious. All right, let's continue to go here. So that's the Russell, and I have now the Bitcoin chart in here, right? Very impressive move from these lows. You could see it moved from, I mean, it broke from this kind of 17,000 level, which was holding for a while, and now we're pushing. I mean, I think we went as high as 21,200 or something like that in this one of the the largest rallies, maybe even since this top in April, May 2021, right? And it's very, very impressive moving here, right? Start to challenge all the bear arguments. But until this high gets taken out and we establish ourselves above it, I still think that this could be just a big fade, and then they could turn this market lower. So I'm going to watch what happens here, you know, with an eye on the monthly closes as well, because if the monthly closes somewhere where we are present or just above 20K, I think, you know, the bulls start to have a much larger argument with the Bitcoin price action. So, so let's take a quick look at the Bitcoin chart. In here, you could see that if indeed this was the low of the market at 15,460 in Bitcoin, and this was a completed impulsive decline in 5 waves, we would be looking next for some kind of a 3-wave setback in here, followed by the next decline lower. So this would be only wave B, followed by a wave C decline much later. And the way this starts is obviously through you know, a pretty good impulsive move, which you already have in a 1, 2, 3, 4, and 5. So this needs to continue upwards if it is indeed the beginning of the next impulse. And you know, that would be wave A. That would lead to a B wave decline, and then another wave C higher. So the way we would want this to look under the bullish alternate would be 1, 2, 3 towards 161.8, maybe a 4th wave next, and then another 5. This would be wave A. And then you would get a 3-wave setback in B, and then you would create another 5-wave move, maybe back towards 25, 28 to 30 in a wave C. And then this would be considered wave A. That would be wave B up in there, and then another decline lower, because that's a 5-wave decline. So the bulls have a lot to prove here, because I know the markets were probably super bearish up into these levels, and you know, there was a lot of leverage, who knows, from the short side, and everybody kind of got squeezed out of there. But if they cannot sustain this move and cannot form you know, a 4th wave in here followed by a 5th, I think then it can probably fall flat on its face, because if you're, especially if you're moving back below 18,385 in here, the bullish argument, it starts to fall apart. So I would be very, very careful in here with this move. Definitely if you're getting back above 21,478, it's going to be much harder for the bearish count to be sustained, right? Especially by looking, let's say, at this as a wave 1. Let's say that this wave 5 is not over and instead is much lower, then this would have to be a wave 1 and a wave 2, which is very deep, followed by a 3, 4, and 5, and it could be some kind of an ending diagonal or whatever, but that's the idea. Now, another count that I want to show you on the bearish side is this back here. So that's the 1, 2, 3, 4, 5. And what is my other count? Let me see. I think it's here. That this whole move here could still be a big flat formation, right? So this wave 2 terminated in there, that's a 3. And then you have an A, you have a drop in B to 138% multiple of wave A. And then you're doing a simple 1, 2, 3, 4, 5 for a wave C of 4. And this wave 5 is still not done yet. So even if you're pushing above this high in 5 waves, right, there's still a little bit of risk in here, thinking that even though this 4th wave is a bit large, I must argue, but this is kind of how that will look. A, B, C, and then you drop again, and only then you terminate this wave A, and this would line up more with the rest of the markets, right? Like I've showed before, that I have a little bit of doubt that these markets in in the equity arena have bottom at separate dates rather than a full capitulation low in all of them. Sorry about that. So that's kind of what I'm watching in Bitcoin. So let's keep an eye on these counts and see kind of which one is going to pan out. But we definitely have important levels that we're watching in here, right? Even under so obviously under this 1, 2, you cannot get back above 21,478, and then under this bullish scenario, you cannot come back below 18,385. So shorter term, I think there's going to be a little bit of fight in here, especially up as we're approaching the swing highs. But if the bulls manage to create a 4th wave and a 5th, then I think they have a lot more arguments for continuing the bullish uptrend in here. All right, let's quickly go back to here and continue here with the TLT. The bond market, it's been, trying to find lows here in October, November 2022. So pretty much at the same time that you saw those lows in the S&P 500. And since then, the yields have started to come lower. Bonds have increased in price in here. But the question is, is this a 1, 2, 3, 4, 5, or is a larger 4th wave that's still at hand, that's forming right now? And I'm going to take you up here to the counts and show you my TLT count, which looks like this. So you have your wave 1 from the highs, a 2, a deep 3rd wave in here, and now you're doing, if you're doing a zigzag, then it's a 1, 2, 3, 4, 5. I don't think we have a 5 wave move in there just yet. That would be your wave A, up in B, down in C. So there's several options in here. Or if this is just a 3 wave move, that means that we're moving maybe more into some kind of a triangle scenario with the 4th wave. Either as a flat, if this turns back and does like that, and then you push higher in 5 waves. So there's several ways to kind of go about this, but I think overall it's probably going to end up being a much longer sideways market, something that mimics this wave 2 back in here. So this one took from March to December, right? So quite a bit of time here, and then this 4th wave could should be maybe at least equal with this wave 2, if not a little bit larger. So there's a lot of options in here. Yields in the meantime have been dropping a little bit in here, and you can see that the top up here on the 10-year was at what was this, 433, and you've gone in a wave 1, 2, impulse in 3. This 4th wave I don't think we've gotten. We were just barely below it, so there's still an argument of a 5th wave still coming. So with the drop in yields, and then another correction, and then we'll see what happens from there. Overall, I mean, we're in a big uptrend in here. And depending on kind of how the Fed is going to respond and what's going to happen with the economy moving forward, there's several options in here, but we're keeping a definitely an eye on these markets with the yield structures in here, because the yield curve is still heavily inverted. The economic data is not looking good. So, but that's a separate discussion I don't want to get into with the Fed and if they're going to start cutting rates, and if the markets are going to rally based on that, or if they still have time to go. So these are something that I'm talking about every day in the videos with the members also. So if you want to know more about those and all those in-depth discussion, go ahead and join my channel to kind of stay on top of that and be, up to date with my thoughts on the yield market and the rest of them. All right, so let's continue to go here. So bonds, and then these are the yields which we touched on. Let's take a look at the US dollar. I mean, gosh, September, I think it was September 28th when we've topped in the US dollar, right, with that magazine covers, you know, won't stop. Can't stop, won't stop, and it's been a straight flush down in the US dollar since then. We're trading 101.95 on the dollar index. I think it's in the latest stages of this decline. We're approaching a pretty important swing low from back in May, June 2021. And here is what I'm looking at. I mean, pretty big rejection from here. From this moving average, but the 200-day is still pointing to the upside. It's starting to flatten down, and I think we're going to get a retest of that in the upcoming weeks and maybe upcoming months in here. And that's kind of what I'm watching on the dollar index, right? You have your 1, 2, 1, 2, 3, 4, 5, 4, and 5, because you can see that you know, just now, after the dollar index dropped for several months, the risk assets are actually starting to rally a little bit more. So if you look at, you know, Bitcoin, emerging markets, you know, it's just some of these meme stocks, right? Some of the ARK stocks as well. It's almost like they were delayed or surprised by such a big drop in the dollar, and they weren't actually rallying. And you know, now that the dollar is actually approaching support, those markets are starting to get a little bit of a push. So I think there is a little bit of a disconnect in here. I'm not sure what's happening, but the dollar is definitely coming into a major level of support between 104 and 100 in here. You could see from the rallies, and I don't think it's going to be able to punch through it, you know, straight through. And this is the count at the smaller time frame, right? So I'm looking at it as a 1, 2, 1, 2, 3, 4, 5 for 3, then a 4 and a 5. We broke below the trend line, but I think this fourth wave highs are going to get challenged into the next rally, and you know, the dollar will probably go back towards 106, 107 again over the next several weeks to several months to start to correct, and that could put pressure again on the risk assets to the downside. You know, on Bitcoin and the rest of the stocks for a while, you know, and then if the next leg lower begins, if this is indeed, you know, a wave A or a wave 1, you're probably going to get that B or 2, and then you're going to get another leg lower in the dollar. And then, you know, then we'll see even if you rally to new highs or you continue to push. And that's something that's going to happen kind of down the line in here. So that's just a quick discussion on the dollar. And what did I just do here? Probably put this, okay, there you go. Sorry about that. Let's take a look at gold. I mean, gold, similar story, right? It started to rally or bottom exactly when the dollar did. So the dollar was in September. You know, gold hovered around these lows for several months in here till about November, and then it's starting to push higher. I have a couple of counts in gold in here. One it's bullish, one it's bearish. I'm gonna show them to you in a second. Let me go here to my futures account, and this is the gold. So this is my primary interpretation still, that this was you know, a big second wave up in there in the gold. Wave 1, wave 2, then wave 1 flat into the 61.8, touch to perfection if you're measuring it from this wave 1 low, A, B, up in C, and then you know, the next decline to begin in gold. So we're at a very kind of high limits for the second wave in here. You could still push back towards 1987, but it's I think by that time we would be probably in the beginning of a new bull market in gold, or in the initial phases of that bull market. And so that's kind of what I'm watching. I'm watching for reversal sign. We're actually short through some GLD trades in here. I think that under both scenarios, either under this bearish or under the bullish one, which I have in here, right? This whole thing was a WXY. This was a wave 1 of the next bull market. We're probably going to get a second wave pullback, you know, in the not too distant future. Right, maybe there's a little bit more upside in gold, but I don't think it's going to be too much, and then we're going to start to drop and correct, you know, just to kind of keep the bulls honest. I think, you know, it's hard for me to believe that this is going to continue to push and push and push in a wave 1. It needs that pullback to pick up more steam, and then again keep these bulls honest, latecomers, whatever. So we're probably going to drop back at least towards 1800 in gold before we reinitiate the bullish move. So again, under both scenarios in here, we're probably going to have a sell-off not too far in the future, especially with the way the dollar is acting and being at these kind of lower levels as well. So that's my view on gold. And then copper, pretty bullish in here. It's coming into some important, supply zone. We just try that again, right there. Starting to crack back above it, depending how we're gonna move it. This is all because of the China reopening and maybe the excitement with this, emerging economies with the drop in the dollar, maybe a return to more normalcy. So copper is reacting in here. We have to listen to it. Any signs of failure in here or some kind of a bearish engulfing would be a bad sign for the economies moving forward and for, recessions and the rest of the bearish discussion. So keep an eye on copper because that's an important indicator of global strength. I don't have a lot of views in the oil. I haven't been updating the counts. I guess I'm still slightly bearish on it in here, although we haven't made a new low below this in here, but it's not convincing enough yet for me on the bullish side either. It's more of a kind of a sideways market in there. And then you could see emerging markets in actually IFA, which is Europe, Japan, so everything without United States and Canada in here, created a nice inverted, almost like an inverted head and shoulder in here with a very short second wave. I'm not sure, but this is a pretty good reaction with the dollar sell-off as well in this emerging markets. And it could be a lot of bullishness to come in here. Again, I think we might be in a fifth wave in here, and we could get a little bit of a pullback before we start to rally again in this market. So, but definitely, if you take a look at some of the European banks, if you take a look at maybe even the DAX, some like if you look at Argentina stock market, Spain, there's a bunch of them that look fairly well. China. And a lot of these markets kind of outside UDS that have been turning bullish way before the US stock market. So there are a bunch of opportunities there, if you believe in this rally in here. And, it seems to be that it could be working, right? So VIX in here, it's also dropping below these support levels. Very interesting. We'll see if this is going to be sustained or if we're creating a bullish engulfing. If something like this happens, rest assured, we're probably going to move back towards the top of this channel, and that's going to be some huge risk events. The VIX curve is still sitting up in contango, so it's still moving higher like that. As people, perceive less risk on the front end and then larger risk in the future. When the VIX curve starts to invert and move the other way around, so this one raises up on the front end and the back end goes lower, right? That's when you start to have a lot of fear in the markets. So we'll watch those with the members as well. But, these are approaching levels here where you want to be a bit careful, on the continuous bullishness in the stocks. But so far volatility gets dropped. All right, guys. So again, thank you so much, for watching. Don't forget to visit me on Twitter. Don't forget to visit me on the Telegram channel as well. Go ahead and give a try to my services up in there. Thank you for watching. As always, I appreciate you being here, and I'll see you on the next video. Thank you. Bye-bye.